Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grevner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get things started today, not really the greatest week when it comes to what happened on the markets, but let's recap this week's activity.
Yeah, we start on the cattle side with what's by and large not great news for the week. Cash cattle down $2.50 this week. When we look at those feeder cattle markets this week, they were anywhere from $3 to $10 lower. On the future side, we're also down with that December live cattle futures contract down $5.15 and the November feeder cattle futures contract down $5. On top of that, you look at what happened on the corn side of the equation. These corn futures up another 16 cents this week, which doesn't help us on the livestock side of the equation. The choice box beef price down $2.40 this week. Switching to the hog side of the equation, cash barrel and gilt prices were 62 cents lower this week. The December lean hog futures contract down $2.80. A gain on the pork cutout value up 67 cents this week, which for me, it reminds me to say, we're $22 higher on that pork cutout value this week relative to where we were a year ago at this time. So some pretty good strength when you look at the pork cutout value.
Really, I would assume that means a continued and a testament to the strong demand for U.S. pork. Not only that, plus as we get into a couple of these reports this week that we're going to talk about.
Yeah, absolutely. You gotta tell yourself that to have those kind of pork cutout values, you got to have some pretty strong demand going on. So good news in what otherwise is a period of time where we're pushing a lot of hogs right now.
All right, let's talk, speaking of pushing a lot of hogs, and cattle, let's talk a little weekly slaughter as we get into this week's numbers, down a little bit from where we were a week ago.
Yeah, that's right. So 643,000 cattle estimated to be slaughtered this week by USDA. That's down 11,000 head from where we were a week ago. And on the hog side, 2.679 million head of hogs to be slaughtered this week. That's down 9,000 head relative to a week ago. I will say, when you look at overall hog slaughter, and again, don't forget just how shut down we were for a period of time. We're up 1% year to date. So we've picked up more than we lost in that shutdown on the hog side. Cattle, we can't say the same, down 3.8% year to date on cattle slaughter.
All right, a pretty big week as we look at USDA reports. Let's start off and talk cold storage and really some interesting numbers as you get into that report.
Yeah, if we look at the combination of beef, pork, chicken, and turkey ending stocks, down about 200 million pounds again for September relative to a year ago. That's been a cycle we've really been on for the last 5 months or so, and you can look at pork to tell a lot of that. So pork ending stocks in September, 467 million pounds. That compares to almost 600 million pounds in September 2019. So 5 consecutive months here where we've seen pork ending stocks of about 20% below a year ago levels. That's really driven the overall numbers as well. You look on the beef side, we're fairly flat year over year for beef ending stocks in September.
And again, kind of that whole demand picture, knowing we have so much pork coming online and coming through the production system. But to see our stocks down significantly is good news.
Yeah, absolutely. When you look at the path, we have seen a modest increase in pork ending stocks over the last 5 months. However, that's seasonally what's been happening. It is a testament that we aren't backing up any kind of pork. It doesn't appear in freezers at this point. And when you remember just how hard we're pushing in terms of slaughter and production, all in all, that's a good piece of news yet again for another month.
All right, let's talk livestock slaughter. Weights are definitely continuing to be a factor as we look at those numbers.
Yeah, you start on the weight side. I just remind us higher cattle weights have added about 3% additional to beef production. Higher hog weights have added nearly up 1% to pork production when you look at those year-to-date numbers. If we look at September data here that we got this week, Total cattle slaughter is 4.6% higher in September. You add again on top of that the weight side, and we get total beef production in September 7.6% above year ago levels. A pretty good increase in beef production thanks to those higher cattle weights. On the hog side, 3.6% higher hog slaughter in September 2020 relative to a year ago. You put on top of that higher barrel and gilt weights, and we get 4.4% more pork production in September.
What are some things that we need to think about as we're looking at, I'm assuming those higher weights aren't going to go away necessarily anytime soon. Is that something that we're continuing to monitor to see how much we're increasing weights and how much that's adding to our availability or our amount of product coming online?
So I'll start by just reminding us that, my goodness, we're pushing even more production than we would have ever thought of beef and pork because of those higher weights. And in fact, the issues with COVID-19 and the slowdown, shutdown of processing plants probably continues to be just as difficult for us on terms of weights as it is numbers. It's both sides. Now, I frankly hope we get into 2021 and we can finally find ourselves maybe digging back out of that hole and getting lower weights. It might prompt us to begin to think about overall supplies of both beef and pork in 2021, although I think numbers, especially on the pork side, in terms of slaughter numbers, will be higher. Maybe we'll get a little break on the weight side and not add quite as much to total production. But to the demand comment, yet again, weights have added a lot of additional meat to the market. It's amazing the prices we've really been seeing, especially on the pork side of the equation.
I feel like it also is putting a lot of pressure on domestic consumers to increase their consumption as well, knowing that we have this much more product coming online.
Yeah, I think, we get in a situation where it's my concern, I guess, as we kind of look forward here, that consumers at some point reach in their pocket to buy more meat products, and there's not a dollar bill laying in those pockets any longer. We've kind of been insulated, if you will, from some of the worst of the economic downturn due to COVID-19 as a result of stimulus. And, if those dollars go away and consumers have less money, I worry, especially when we're pushing still very high prices relative to historical standards to consumers.
Scott, the big news of today is cattle on feed report. And as we take a look at those numbers at the upper end of free report again this month.
Yeah, we're finding ourselves with more cattle. And again, we're not outside the range of pre-report estimates, so I don't want to be too pessimistic about what we got today. But for me, it means we have more cattle to deal with in the first quarter coming to the market. You look at on feed October 1, we're at 103.8 relative to a year ago. The upper end of the range was 103.9. So again, we didn't fall outside it, but we sure got to the upper end of it. Placements were heavy as well. September placements came in at 105.9. The upper end of the range of pre-report was at 106.5. So again, maybe slightly bearish, and reminds us that a lot of cattle supply is coming as we start that first quarter of 2021 at least.
Scott, I do have a question. We talk a lot about the concerns about shackle space on the pork side of things, knowing that we're going to continue to have more cattle coming online through the first quarter of 2021. Do we get nervous? Is that the same concern on the beef side of things, that we may run out of space? And then what happens at that point?
Yeah, so you actually raise a very good question, Megan. I think we got ourselves so used to excess supply and excess shackle space, I should say, in the cattle industry because we had it for decades. But you look at the last few years, and we've already been seeing a situation where shackle space is certainly much less plentiful than it was a decade ago. And I think when you look at 2021, one could certainly raise that red flag just a little bit higher, given what I think is going to happen, out of the gate. So it is one worth watching. For the first time in a long time, I think you see a lot of places around the country who are asking about more cattle processing capacity finding someone willing to invest in that additional processing capacity, I think, has been a much tougher road just because of the history of being in a excess capacity situation that made returns to beef processing not all that great, frankly, over the longer term.
All right, Scott, that's it for us this week, and a pretty quiet week for us next week.
Yeah, that's right. We only end the week next week with a restaurant performance index. Hopefully that will show us the same demand strength that we've been seeing in all these other reports.
Always looking for a silver lining and a rainbow, right?
That's right. That's right.
All right, Scott, have a great weekend. We will talk to you next Friday.
That sounds great, Megan.
We have our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can also submit questions and comments there as well. And for all of the really great Brownfield podcasts, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.